Hey, hello everybody. Thanks for joining on time. It's 7:32 already. Okay, so we have quite a bit of people here today. Hello, good evening, Dave. Good to see you again. Always joining our webinars and Telegram Live. Okay, so before I start, let me introduce myself. I'm Jeremy. I'm a dealer from Phillip Securities, POEMS. And I'm still from the CFD department. So before I start, let me do a quick shout out for this promotion that my department is currently running. Okay, so for all of the FX traders out there, or for anyone who is planning to looking to trade into FX, you can check out this promotion whereby if you trade FX CFD, we'll be giving out cash credits. Okay, next slide. So how it works is that, okay, so basically this promotion will last from 3rd July till 29 September. Okay, so it has already been 1 month since this promotion started. So how this promotion works is that first you need to be opted into the CFD facility. You can just opt in through your existing POEMS account. You can find under the CFD tab and you can open an account. So from there on, how this promotion works is that for each month, if you execute 8 FX CFD trades, you'll be rewarded with $20 worth of CFD cash credits. And for the subsequent 28 FX CFD trades, you'll be rewarded with another 100 CFD cash credits. So you can actually earn up to $120 worth of CFD cash credits. Okay, so as this promotion ends in September, so you still have this month, next month, so you can actually have the chance to earn up to $240 worth of cash credit. Okay, so you can scan the QR code on the screen to find out more on this promotion. Okay, and without further ado, let's start the webinar for today. Let me share my screen. Okay. Okay, hold on. Okay, can you guys see my screen? Okay, if you guys can see my screen, can help me type okay inside the chat box so that I know everything is okay. Give me a second. Okay, hold on. Just give me a moment. Okay, I can see the chat box. Sorry, I'm trying to figure out. Okay, thank you, Dave. Thank you, Wenhong. Thank you, Thomas. Thank you, Chatan. Thank you, Flora. Thank you, Zenda. Okay, thank you for active response. Okay, so without further ado, let's start. So as you know, Singapore will be celebrating its 58th birthday. Okay, and we will be commemorating by looking at 2 companies listed on the Singapore Stock Exchange today. So if you have been joining our annual National Day webinars, you know that we usually focus on companies born and bred in Singapore, like DBS, Razer, etc. However, for this year's National Day, I will be widening our investment universe and be looking at companies listed on the SGX in general. Okay, so for our non-Singaporeans audience who is in this webinar tonight, Singapore's National Day actually lies on the 9th of August each year. And this year, we will be celebrating our 58th National Day. So personally, for me, I'm looking forward to it. Apart from celebrating the nation's birthday, it is also a public holiday in Singapore. So that also means more time to spend with our loved ones and also to rest. All right. So help me comment inside the chat box SG58 if you are also as excited as me for this year's National Day. Meanwhile, let me see how I can see the chat box. Oh, okay, yeah, I can see the chat box. Thank you, Dave. So only Dave is excited for the National Day. It's a public holiday for everyone. Thank you, Thomas. Okay, so before I start, can you guys name me just one SGX listed company that currently is at the top of your watch list? Then we'll see if any of the companies mentioned by any one of you actually is one of the top two, one of the two companies that I'll be sharing later on. Any company, okay. Wonhao, DBS. Anyone else? Oh, Venda, BM4, SIA, Capricorn. Any more? Okay. No more. Okay. RMG, SGX. Okay, great. Thanks for the response, guys. Okay, so give me a second. Okay, so as usual, before the start of the webinar, some quick disclaimer. This webinar does not serve as a professional financial advice. So for financial advice, you should still seek advice from a financial advisor after doing a proper and holistic financial assessment. Okay. Okay, so here's the outline for today. First, I'll be sharing the screening process on how I actually narrowed down the investment, the whole SGX investment universe down to 2 counters. Okay, and next I'll be sharing each of the 2 counters. And lastly, if you stay till the end of this webinar, I'll be having a special announcement, which I believe that most of you would find attractive or would like it, promise. So you stay till the end and you'll find out. Okay. So with about 650 companies listed on the SGX, we actually will need to be clear what are the criteria we look for in a company in order to narrow down this long list of companies listed on the SGX. So for the screening process, I prefer it to be simple and easy to implement. And my objectives are as follows, which is to firstly, find good companies, and secondly, to find undervalued companies. So firstly, I'll define a good company as one with a high return on equities, or ROE. So the formula for calculating ROE is as follows: you get the net income, the annual net income of the particular company, and divided by the shareholders' equity. So the reason why I chose this is because the primary purpose of businesses and companies is to maximize the returns of the shareholders. And ROE provides you with an insight into the business profitability for owners and investors. So in short, it helps investors to understand whether they are getting a good return on their money. At the same time, it's also a good way to evaluate how efficient the company can utilize the firm's equity. So actually, it makes sense. Personally, for me, I think it makes sense to buy stocks of companies that can make the most profit for their shareholders. However, it is important to note that ROE is not a measure of a company's overall performance, but rather a measure of how efficiently the company is using its equity to generate profits. And in short, higher ROE indicates that the company is more profitable and is using its equity more efficiently. Okay, next. So secondly, I'll define a cheap company as one with high earning yields. Okay, so as shared by Benjamin Graham, also known as the father of value investing, and he has this popular book called the Intelligent Investors. Some of you may have read it already. It's one of the top finance book that should be in your watch list. And so what he says that the Mr. Market tends to be irrational in the short term, but in the long run, he actually values stocks close to their true value. So there are actually times to exploit this Mr. Market's unstable emotions. That is, to buy from him when he's depressed about stocks. So in this way, you can buy the best companies at low price. So the formula for calculating earning yields is as follows, which is earning yields, which is earning per share, or EPS, divided by the share price. So this is actually the inverse of the PE ratio, which is the share price divided by the EPS. So for now, you know that I'll be using ROE and earning yields as my first layer of screening. So just curious, any one of you that's in this webinar tonight actually uses one of these metrics when screening for counters? If so, you type me in the chat so I can know. So anyone uses either ROE or earning yields during your screening process or investment analysis for particular counter? Okay, thank you, Dave. Thank you, Hao. Thank you, Justin. Okay, yes, so good. So some of you actually are quite familiar with these counters already and already, these metrics and already using it yourself already. Great. Okay, so moving on. Okay, so in order to rank the SGX companies based on the above two factors, I'll be using the stock screener provided on the SGX website, which is called the SGX Stock Facts. So basically, this screener is a collaboration between SGX and Refinity. So Refinity is a London Stock Exchange group business, and it's also one of the world's largest providers of financial markets data and infrastructure. So I would say this is a pretty solid screener and quite a reliable one. So for the stock screener, there are many more metrics available for you to use to screen for stocks based on your preference. So you can click on the filter option at the top right of the screen. And you can select the metrics you would like to use to narrow down your investment universe. So for screening of the good companies, I'll be using the ROE metric, which is available on the SGX Stock Screener. So as mentioned, the higher the ROE, the better. Next, for screening of undervalued companies, I'll be using PE ratio instead, which is the inverse of earning yields. And the PE ratio metric is also available on the stock screener. And in general, the lower the ratio, the more undervalued the company's stock is. Okay. So if you like to try out the screener yourself, you can scan the QR code on the screen, which will bring you to the SGX screener webpage. Okay. So my colleague today, along with me, will also my colleague today, Vanessa, she'll paste the link inside the chat also for your reference. So do you think this screener will be useful for you when you are doing your analysis in the future? If you think it would be, let me type useful inside the chat box. Okay, thank you, Vanessa. Well, Vanessa have pasted the link inside the chat box for you to take a look. Okay, thank you, Wai Leong. Thank you, Tenda. Thank you, Dave. Thank you, SHC. Okay, great. Glad that some of you found it useful. So you can click the link that Vanessa just shared inside the chat box. Then you can take a look later. Meanwhile, you should focus on my webinar first. Later you miss out some of the points. Okay. So, however, after the screening process, I actually noticed that a lot of penny stocks came up on the list, possibly due to the high ranking in the PE metric, the price price earnings metric. So basically, for penny stocks in Singapore, they are traded in cents. So to be more specific, they are less than 20 cents. However, personally, I'm more comfortable with stocks that are trading at a price of at least 50 cents or more. Okay, so that being said, I added two more extra criteria to my screening process to sieve out potential penny stocks. So the two criteria are that firstly, the counter has to be trading for more than 50 cents, and next, the counter needs to have a market cap of at least $10 million. Reason being, penny stocks tend to be highly volatile and they have very low liquidity, especially in the SGX market. And they are also very prone to speculation. So all of these make such stocks very risky counters to hold. Okay, and that is not something that I want to recommend today. Okay, so after screening the stocks based on my initial metrics of high ROE and low PE ratio, as well as the two additional criteria mentioned earlier, I will have a more organized list of stocks ranked based on the criteria. So with the list, I can then start to conduct my preliminary research by going through the list. Okay, so before I go on, for the preliminary research, I then go down the list, starting from the top rank, to look at each of the counters, say the past 5 years performance minimum, as well as things such as whether there are any analysts covering the counter. So this is in order for me to conduct further analysis later on. So personally, I feel that it is good to leverage or read on analyst report, as I mean that is literally their job, spending hours on the screen each day analyzing the stocks within their coverage. So this will actually help to save the time and effort for people like you and me who generally have a day job. Yeah. Also, research analysts, they also tend to have more resources to do the analysis. For instance, having access to things such as the Bloomberg terminals, or being able to go down to their AGMs or financial results announcements, or even conduct ground interviews at the company site itself to understand the business model better. Okay, so hence, after my preliminary research, I managed to find 2 counters that we can look at today. Okay, so let's understand these 2 companies better by doing some qualitative analysis on them to complement on our screening based on quantitative metrics. Okay, so our first company for today will be Samudera Shipping. Okay, so can I know any one of you here tonight is currently holding on to this counter right now? If you are, let me type S56, which is the ticker code. Let me see. MC, okay, you're holding Samudera. Anyone else holding Samudera? In my watch list, I bought Yang Zhejiang instead. Okay, Yang Zhejiang is a good choice, in my opinion as well. Well, yeah. Okay, thank you, MC, and thank you, Wai Leong. Okay. And sorry, give me a second. Okay, so basically, Samudera Shipping is in the industrial sector, focusing on the marine transportation. So the company is primarily engaged in the transportation of containerized and non-containerized cargo through its container shipping and bulk and tanker business segment. So for those of you who are not familiar with the shipping industry, for container ships, they generally carry packaged goods like examples are like the cargo ships. But the difference is that the fringe will be stored in the shipping containers. Whereas for bulk carriers, they generally carry loose goods that are not packaged, such as like a coal, cement, sand, and grains, etc. And lastly, for tankers, such as the oil tankers and the chemical tankers, they generally carry things like oil, chemicals, petroleum, and gas. Okay, so let's understand the company profile for Samudera Shipping a little bit more. So it was incorporated in 1993, and Samudera has actually expanded from a container shipping provider into the bulk and tanker business and logistic business since, covering services in the Southeast Asia, the Indian subcontinent, as well as the Far East. So the group's vessels and services currently ply trade routes connecting various ports in Southeast Asia, the Indian subcontinent, and the Far East, as well as the Middle East. So leveraging its extensive network, Samudera's container shipping business actually offers reliable feeder services between its hub port in Singapore and other spoke ports in Asia, as well as inter-regional container shipping services to stakeholders such as manufacturers, importers, and importers. So the group serves a wide spectrum of shippers from its headquarters in Singapore and via representative and agency offices in various cities in the Southeast Asia, Indochina, and Far East, the Indian subcontinent, as well as the Middle East. So for its bulk and tanker shipping business, Samudera's fleet of bulk carriers and tankers are chartered out to shippers for the transportation of dry bulk and liquid cargo. The vessels are deployed either on time chartered contracts of arrangement or single voyage basis. So currently, Samudera's operating fleet, which comprises vessels owned and leased by the group, currently stands at 32, and this comprises of 27 container vessels, 4 chemical tankers, and 1 gas tanker. So the company was listed on the SGX main board back in July 2000, and for the past 5 years, the stock has actually delivered a whopping 329% as of 1st August in terms of returns for its shareholders, despite the sharp drop in April. You can see there was a sharp drop in April, and versus the benchmark SDI ETF, which delivered a mere 4.71% for the past 5 years. So the company has benefited from the logistics squeeze happening in 2021 due to the COVID pandemic. So this was the period where the share price appreciation actually happened at an elevated pace. So you can see that since 2021, the share price actually started to gain more momentum on an upward trend. So as for its present situation right now, for FY 2022, the Samudera actually recorded their results were actually quite impressive. In terms of their revenue, it had an 88% year-on-year increase. For its net income, it increased 151% year-on-year. As for its profit margin, it was 33%, which was up from 24% in FY 2021. So the increase in margin was driven by the higher revenue. As a result of the improvements in demand and strong fringe rates across all business segments, primarily container shipping. So even though while fringe rates softened in the second half of the year, average rates for the full year were actually significantly higher on a year-on-year basis as demand for shipping services outpaced supply. Okay, so for 2023, the year-to-date performance is down by about 3.53% as of 1st August. So the weak performance was mainly attributed by the 20% drop in share price in 28 April, when the company actually issued a profit guidance, reporting a contraction in its first quarter earnings in 2023 due to the softening of the fringe rates and a decline in container volume handled during the quarter compared to the same period last year. So some outlook. So here's the outlook for Samudera Shipping. So firstly, the ongoing normalization of consumer behavior and inventory stocking to pre-pandemic levels is expected to weigh down on the demand for container shipping services. So moving forward, while fringe rates will taper to a new normal, Samudera has actually timed the ins and outs of its fleets to actually achieve a younger and more efficient fleet in 2023 and to better manage its charter costs. And in addition, they actually target to expand its service network as countries like China continue to lift border restrictions. Secondly, PT Samudera Shipping Indonesia, which provides sea transportation for bulk shipping and other maritime projects, will hopefully be a revenue driver in the medium term as bulk and tanker fringe rate have remained strong. So the management's fleet expansion by 2 chemical tankers in FY 22 also reflects some form of confidence in its outlook. And thirdly, we can also expect the newly acquired subsidiary to contribute. Samudera's agency and logistics revenue increased by 56.8% year-on-year in 2022 after its acquisition of 50% stake in the Indonesia-based third-party logistic company. So PT Samudera Logistic in April will be the first full year contribution from the new acquisition. Okay, next. So fourthly, the shipping industry is actually highly cyclical, if you don't know already, and the cycles are actually quite apparent in its stock price over the years. So for years, there's actually a cycle of low investment, leading to higher fringe rates that creates a boom of shipbuilding, and rates then crash, investment stops, and so the whole cycle starts all over again. So one of the main factors fueling this cycle is the low cost of entry into the business. So in general, a few millions will actually enable a new entrant to enter the market and capture the high shipping rates. So supply expands massively when shipping prices are high, and this tends to lead to oversupply and crushing prices, driving out weaker players out of the market, and then the cycle starts all over again. So that being said, looking at the current share price of Samudera Shipping, this could be a possible inflection point and a good opportunity to enter into a position for this counter. Okay, so so far so good. If all is good, please help me type cyclical inside the chat box so I know that you are following well. Justin, container rates are falling off a cliff. Yes, correct. So as mentioned, fringe rates are slowly tapering to the new normal. And I personally believe that shipping industry being cyclical, currently it could be in the stage whereby, as you can see on the screen, whereby fringe rate crashes. And personally, looking at the price action over the years, I think this could be a possible inflection point. Okay, thank you, Dave. Thank you, Zenda. Thank you, Lim Liang. Okay, Ken. Thanks for following up closely. Okay, next. So the last 6 months have actually been quite a tough month, have been quite tough for for investors that are holding on to this counter, where they actually see their share price decline, worrying 20% back in April. However, if we actually zoom out and look at the bigger picture on the longer time frame, let me move back a few slides back here. So the share price actually delivered a strong performance of about 329% returns in the past 5 years, more specifically in the past 3 years. That being said, I feel that share price do not always rationally reflect the value of a business. So one way to examine how market sentiment has changed over time, I think, is to look at the interaction between company share price and its earnings per share. So during the 5 years of share price growth, the EPS actually grew at an average annual rate of about 360%, much higher than that of the share price, which grew at an average rate of about 72%. Therefore, it seems that the market actually moderated their expectations for growth, and this cautious sentiment is also reflected in its relatively low P/E ratio of about 1.1 to 1.2. And also to add on, the belief in within the company itself remains high for insiders, as there actually hasn't been a single share sold by the management or the company board members as of 6 July. But more importantly, the group CEO and executive director, Barney, actually spent about $220,000 US acquiring shares at an average price of about 97 cents. So a strong buying like that could actually be a sign of opportunity, and also in some way reflects confidence in the business. And all in all, with the stock price having performed exceptionally well over the last 5 years, these patterns are actually accounted for by investors. So given the stock has proven that it has a promising trends, I think it is a counter worth researching further to see if these trends are likely to persist. So guys, after hearing my sharing on Samudera Shipping, let me know if you are bullish or bearish in this on this counter. Let me know in the chat box. Okay, guys, later I'll answer your questions all at one shot, so that we don't disrupt the flow of the webinar. Okay, we move on. Okay, so our second company for today will be Food Empire. So similarly, can I know anyone of you here is currently holding on to this counter? If so, you type F03 inside the chat box. Lim Pyong-in Bear. Okay, thank you, Zenda. Zenda is holding on to Food Empire. Okay. Average P, you're referring to Samudera, is it? Emmanuela? Okay, let's move on. So Food Empire is basically in the consumer staple sector, focusing on food and beverage products. So Food Empire is a multinational food and beverage manufacturing and distribution group headquartered in Singapore. So Food Empire's branded products include a wide variety of beverages and snack food, such as regular and flavored coffee, and as well as cappuccinos, chocolate drinks, flavored fruit teas, bubble tea, etc., etc. So their core product is actually instant coffee beverages and is marketed mainly under the Mac Coffee, Klasno, as well as Cafe Right brands. So their product offerings are generally categorized under beverages, non-beverages, as well as ingredients. So Food Empire products are sold in over 60 countries spanning North Asia, Eastern Europe, Southeast Asia, Central Asia, the Middle East, as well as the Northeast. So you can see that they have a very wide network. And some information on the company's profile. It was founded in 1993 and listed on the SGX in 2000. So Food Empire, they actually won quite a lot of accolades and awards, such as one of the most valuable Singapore brands by IE Singapore. Then for their product offering, Mac Coffee, it actually has been ranked as one of the strongest Singapore brands. And the Forbes magazine also has named Food Empire twice as one of the best under $1 billion companies in Asia. And lastly, they also was awarded as one of the Asia's top brands by Influential Brands. So they actually have a long list of awards, which you can find more on their website if you're interested. So all of these are actually, I feel, is a strong testament to its strong brand equity. So their revenue comes from 3 main regions, mainly Russia, Ukraine, Kazakhstan, and CIS markets, as well as the Southeast Asia market. So on the screen is their FY 2022 revenue categorized by their geographical regions. So for the past year, the stock actually delivered a strong performance of about 113%. So let's look at their present state right now. So for FY 2022, despite the geopolitical tensions in its core markets, which is Russia and Ukraine, as well as rising inflation, Food Empire actually managed to generate a record level profits. So Food Empire reported a net profit of 60.1 million US dollars for 2022, as well as an increase, which is an increase of 211% year-on-year, while its revenue actually grew 24.5% year-on-year. So Russia actually reported a revenue growth of 29.1%, mainly due to strong consumer demand, as well as the appreciation of the Russia ruble against the US dollars. And similarly, despite fluctuating currencies from geopolitical uncertainties, its Ukraine, Kazakhstan, and CIS segments actually achieved 28.6% year-on-year revenue growth. However, for its Southeast Asia segment, the revenue actually fell 4.2% year-on-year, mainly attributed to the post-pandemic normalization in Vietnam. But it was also partially offset by improved contributions from the Malaysia's non-dairy creamer and snacks manufacturing facilities. So I think it's also good to note that the group was once again recognized as the top 100 most valuable Singaporean brands by Brand Finance for the 12th consecutive year, with its estimated brand value increasing 17% year-on-year to $101 million US. So as mentioned earlier on, this is a very strong testament to its strong brand equity. Okay, so if you are following good so far, can you help me type strong inside the chat box? Emmanuel, why do you think it is trading at such a low PE? I think as mentioned by, give me a second, as mentioned by Justin earlier on, and I also mentioned earlier on, it was mainly due to the normalization of fringe rates. So in a way, the boom cycle of the shipping industry is kind of in a sense over. So just now, as I mentioned, it is a very cyclical cycle. So if you were to pinpoint where exactly which part of the cycle is right now, I would say it would be at the low fringe rates part, which we call. So I think investors generally have a more cautious sentiment for the shipping industry. Okay, thank you, Dave. Thank you, James Day. Okay, good. Let's move on. So the company has also reported its first quarter results for 2023 in May this year. So for first quarter, Food Empire actually reported a net profit of $13.8 million US, which is a 50.9% year-on-year increase. And if you were to extrapolate up for the full year forecast, you account for 29% net profit increase year-on-year, while revenue actually rose 24.2% year-on-year. So from its 2022 and the 2023 first quarter results, we can see that the level of demand actually remains strong for Food Empire's products, despite inflationary pressures, as well as the geopolitical uncertainties in its core markets, which is Russia and Ukraine. So this could be mainly due to the consumer staple nature of its product, where demand is relatively price inelastic. Okay, so some of you may have heard of this concept before, or some of you may be new. So basically, this means when the product is price inelastic, this means that the change in price, whenever there's a change in price in the product or services, it actually results in a less than proportionate change in the demand. So other examples of goods or services that are price inelastic are things such as your tobacco, utility, or food, etc. These are things that people normally, that the demand will not really be affected as much when there's changes in price. So the group's product in the coffee segment is considered an essential item that was not placed under sanctions. And this actually leads to a more sustainable or even stronger demand, as proven by the company's consistent result. Okay, so that being said, are all of you clear on the concept of price elasticity? If so, please help me type good, so I know you are following well. Okay, thank you, Dave. Thank you, James. Thank you, Zenda. Thank you, Lim Pyong-in. Okay, great. How about the rest? Okay. Thank you, guys. Let me carry on. Okay. So another thing to take note is that for Food Empire, they actually have been ramping up on its share buybacks over the past 3 years as the company's financial performance actually improved. So as of 13 April market close, the company actually bought back a total of about 16.98 million shares. Okay, and this actually reflects the management's view that the shares are undervalued relative to the company's performance and potential for growth. So the share price is currently trading at about 7.5 to 8 times its earnings, as compared to other listed beverage companies that make instant coffee, such as Nestle, Mondelez International, Starbucks, Kraft Heinz, and Tata Consumer Products, which are all trading above 20 times their earnings. So next, let's look at their outlook. I believe, firstly, I believe that its strong performance should likely persist from the strong demand in its core EIS markets, especially in Russia. But as shared earlier on, due to the consumer staple nature of its products, demand is relatively price inelastic, and the cost of raw materials, trade, and logistics from higher inflation can easily be passed on to consumers. Okay, on top of that, despite its geopolitical uncertainties in its core markets, it will actually have little impact on its core product offerings, which is the 3-in-1 coffee mix, as it is considered as an essential and unlikely placed under sanctions. So in addition, the management's focus on expanding in Vietnam to diversify beyond its core markets, such as Russia and Ukraine, have actually shown signs of positive signs in terms of traction, and this should likely support its top line in the near to mid-term. Food Empire also ramping up their new capacity in Southeast Asia to support greater production of its new potato chip brand called Cracks. So the expansion of a facility to manufacture non-dairy creamer will begin their commercial operations by the end of 2023. And lastly, sales in its India market actually has also doubled in 2022. Its spray dried and new fish dried coffee plants are expected to operate at full capacity in 2023, capitalizing on the high demand. Okay, next. Thirdly, I believe that the management should continue unlocking shareholders' value by continuing its buybacks, concurring with my view that the shares are undervalued based on its relatively low PE ratio. And next, it is also important to note that Food Empire has a competitive moat, since its firstly, its industry has a high barrier of entry, and next, it also possesses a sticky brand recognition from the awards and accolades it has received over the years, as shared earlier on. So for Food Empire, I think some of the price catalysts that you can look up in the near to mid-term, which could likely push the share price upwards, is firstly the end of the Russia and Ukraine conflict, as well as the continued strong growth in other markets and revenue diversification away from Russia. Okay, so similarly, after hearing all this, would like to hear your view. Do you think, are you bullish on this counter or are you bearish? Let me know inside the chat. I think just now Zenda was holding, mentioned she is holding on to Food Empire. Justin says bull, Vadi says bull, Dave says bull, Zenda neutral, Wai Leong mid to long term bullish, James neutral, Lim Pyong Ying ROI is 48 point, Zenda to dividend low. So correct. So anyways, for my sharing, so actually what counters that you should be looking at also depends on your investment objective. RSI. Lim Pyong Ying, we can elaborate what you mean by RSI. You're referring to the indicator, is it? Technical indicator. Okay, so next, my concluding, let me just share some of my thoughts to kind of sum up what I've shared today. So I feel that the ex-Jack market still have plenty of strong and quality companies for you to look at. And if you feel that my screening process is feasible and simple to implement, you can repeat it to nitpick other companies based on your preference. So for instance, just now for the ex-Jack stock screener, there are actually a lot of other methods for you to select to screen for counters. Not necessarily you have to stick to the ROE and PE that I shared earlier on. Because due to the time constraint and the scope of this webinar, I prefer to keep it simple. So only 2 metrics was used. And that being said, if you have the time, you can even dive deeper into the 2 companies and understand the companies better by perhaps you could look out for other factors such as the quality of the management, the share price drivers over the years. I think it's important to know what caused the share price to increase and drop in the past few years, and any red flags in the past, and its competitors and so on. Okay, if you notice, I did not really talk about technical analysis. Okay, so for those of you who prefer to include both FA and TA into your investment analysis, you can also do that to get a more comprehensive understanding of the counter. Okay, and hold on, I know now it's 8:20 already, and this is not the end yet. Okay, so I believe most of you have been waiting for this next portion, which I'll be sharing as promised. Okay, so if you recall the outline, the last portion will be a special announcement, which I mentioned that I believe most of you would find attractive and like it. So before I go on, help me type me inside the chat if you're interested to find out. Let me see. Wai Leong, in your view, is Samudera or Food Empire better buy with a 6 to 12 month view? Personally, I would say Food Empire. I would say Food Empire because currently Samudera, if you look at the price action on the chart, currently is on the kind of a bit of a downtrend. So for those type of trends, I prefer to have wait for the price to rebound or to show at least some form of upside momentum before I get into it. As for Food Empire, even their first quarter results were quite good, and it being a consumer staple counter, I think it's safe to hold it for the long term. even for the 6 to 12 month view. Okay, so a lot of you yes, a lot of you are interested. So some of you just now never respond me, then now when it comes to good deal, then you all respond to me. Okay, no problem. I will share it now. Okay, so as promised, here's the special announcement that I believe most of you here would like. Okay, and perhaps some of you may have already known about this promotion, as it was just launched yesterday, 1st August. So to commemorate Singapore's 58th birthday, POEMS is actually now having a limited time promotion where you get to earn a 5.8% guaranteed returns. Yes, you hear it right, 5.8% guaranteed returns. Okay, so I actually went to did some research. I believe this is one of the best, if not the best rate right now out there in the market. Okay, if for FD, if I recall correctly, yesterday I looked, highest was 3.9%. Yeah, so how it works is that you will need to first be opted in our access fund management facility, or what we call the smart park in short. Okay, so some of you may not be familiar with what is smart park, so let me go through. So what is smart park? Smart park is an access fund management facility that actually helps to invest and manage your idle cash automatically into our Phillip money market fund, or Phillip MMF. So Phillip MMF actually aims to preserve your principal value and maintain a high degree of liquidity while producing returns comparable to the Singapore dollar saving deposits. Okay, so the fund will invest primarily in things such as short-term and high-quality money market instruments and debt securities, such as your government and corporate bonds, commercial bills, and deposits with financial institutions. Okay, so for Smart Park, it will actually help to manage both your SGD and USD funds, okay, depending which currency you actually hold inside your POEMS account. So on the screen, it is the 7 days annualized return for the SGD and USD funds. So how can you take part in this promotion? So for limited time from 1st August to 31st August, as long as you fund in fresh funds, okay, minimum of 1,000 and capped at 50,000, you actually get to enjoy 5.8% guaranteed returns, 5.8% per annum guaranteed returns on your idle funds for 1 month. Okay, so for example, you fund it on let's say 2nd August today, and if you do not use the fund during this period, you don't use it to buy any shares or so, you get to enjoy 5.8% per annum guaranteed returns for 30 days for the amount that you funded in. So before I go on to the next part, I'm just going to check how many of you here already have an account with POEMS. Okay, if you really have, just help me type yes. If not, if you are a new client, just help me type no. Just want to get a rough sensing so that I can know how much I need to share in the next few slides. Wow, a lot of you are new clients already. Already existing clients. So okay, later I'll go through more on for the part for existing clients. Okay. So nobody here is new to Phillip client, yeah? Okay, understood. Okay. So anyways, just for the sake, for any one of you who does not already have a POEMS account, you can scan the unique account opening QR code on the screen to open an account. So for this link, it has already pre-selected to opt in for the Smart Park. And once your account is open, you already opt in for MMF for Smart Park. And for this unique account opening link, you'll be tagged under my team's code, okay, which is a HQ dealing team. So hence, if you have any inquiries after opening an account, you can easily reach out to me, myself, or my team for any assistance. Okay, so my colleague Vanessa will paste the account opening link inside the chat. Okay, yes, she pasted already. So if any of you are interested, you can click on the link to open an account. Okay. Okay, moving on. Yeah, so for those that actually want to click the link, here's a screenshot of what you should see after using the account opening link. The smart pack option should be ticked already to ensure that you are opted into it. And you can choose to open a cash plus or a cash management account. Yeah. So due to time constraint, to keep it short, for cash plus, its key selling feature is its low brokerage rates, and it has a margin facility in it. Whereas for cash management, the brokerage rate is slightly higher. However, it has the feature of it allows you to link to your CDP account. So for those that have shares inside Singapore shares inside your CDP account, you don't need to go through the trouble of transferring shares just to trade it. You can just link your CDP account and get started. So yeah, this is the main difference. And next, for existing clients, which I think is the main bulk of my audience here tonight. Okay, Wai Long has a question for you. Based on 238 returns for 50K, the 5.8 is only for 1 month. Yes, correct. So it's only for the it's only for a period for 1 month, as I mentioned earlier on. So for instance, let's say however your funding needs to be within this promotion period, which is from 1st August to 31st August. So for example, you fund in on 15th August, that's when your day 1 starts. And your day 30 will end on 15 September. Okay, so for existing clients, which I think is which consists the most bulk of the audience here tonight. If you are not sure if you really opted in for Smart Park, here's how you can check it. You can log into your account using Poyum's web, poyums.com.sg. You go under account management, and then you go under account management and you go under account details. And there is this, you see the portion circle right here, it says MMF yes. If it says yes, means you opted in already. If it's a no, means you have not opted in. Okay, if you have not opted in, you can just go under account management, online forms, and you'll find this form called the Access Fund Authorization. Just fill in the form and you'll be opted in. Okay. Okay, next, lastly, most importantly, how can you fund in? So you can, for payment methods, you can scan the QR code on the screen to see the various funding methods, as well as the detailed instructions. So usually for me, I'll recommend a pay now or fast method to my clients, as I feel that it's a simple to use method, as well as most importantly, the processing time is the shortest. Funds actually reach your account within 15 minutes. And one thing to note, I think need to note, I see a lot of my clients making these mistakes every now and then, which is you need to key in for pay now or fast. You need to key in your 7-digit account number under the reference or comment section when initiating the payment. Okay. So for like DBS, when you do a pay now, there usually is a reference box. You just need to include in your 7-digit Poyums account number for it to be properly credited. If not, your funds will be stuck somewhere. Then we need to go. It will be a bit troublesome. So lastly, I need to highlight that this promotion is only eligible for fresh funds funded in during this promotion period. Okay, so example, if you already have $10,000 inside your Poyums account prior to this promotion, okay, it will not be eligible for the 5.8% guaranteed returns. Okay, you also cannot. So so for example, let's say the promotion started already, which it already has, and you prior to the promotion you already have 10,000, and this 10,000 still is in your account. You cannot simply just withdraw and fund in again. You cannot withdraw the 10,000 and then you fund in the same 10,000 back again, because this promotion takes into account the net balance of your account during this promotion period. Okay, so after hearing this promotion, do you guys think it is a good deal? If you think it is, help me type good inside the chat. I really think this is quite a good deal. I don't think you should. Wai Leong, yes, max is only 50K. Cannot be more. Yes, cap at 50,000. And has to be fresh funds, yeah. Okay, great. Glad to know that some of you found it good. Thank you, James. Thank you, Yun Wong Hong. Okay, Bon Chiu says asked it takes 3 days to update the access fund form to approve. Okay, so good question, Bon Chiu. So the team that is in charge of this promotion, they actually shared with me that even though it will take 1 business day for the MMF opt-in to be reflected, they will honor any funding in. So any funding in of funds the same day that you opted in for the MMF, the Smart Park. So for instance, you only just opt in today, you can actually start funding in already, and they will honor this eligibility of the funds for this promotion, even though you only be reflected 1 or 2 days later that you already opted in for MMF. So this part do not worry. Wai Leong, good, but should be 1 month. Should not be 1 month, at least 3 months. Okay lah, 5.8. Let's say you put 50,000 is really a free $238 for you already. Should suffice you to makan for say 1 week. Okay. So if you opt in tomorrow, you only get no. So as I shared earlier on, the promotion period, which is 1st August to 31st August, is only for your day 1. Okay, that means your day 1 needs to be within this period. So as long as you opt in for as long as you opt in for MMF and fund in during this period, you'll get to enjoy the full 30 days of the returns, the guaranteed returns. So for example, you fund in on 15 August, you get to enjoy the 5.8% guaranteed per annum returns up to 15 September. Any withdrawal or redemption penalty? No. This one is not fixed. So for Smart Park, which is this access fund management facility, you can take out your money anytime you want. You can use it to purchase shares, and you don't need to specially go and withdraw the fund out from this Smart Park to go and buy your shares. So whenever let's say you want to purchase your shares, the funds will automatically be withdrawn out from MMF and use it to purchase those shares. Or if let's say you make a withdrawal request, the funds will also automatically be withdrawn out from MMF and be available for you to withdraw automatically. You don't have to do any special withdrawal or so. So the only thing you need to do is opt in for Smart Park and fund in. Yes. Dave Chi, can use the funding to buy shares? Yes, can. However, if you use it to buy shares, then the amount used to purchase the shares will not be counted for the 5.8% guaranteed returns for the subsequent days. How long does it take to withdraw the funds from Smart Park? Transfer back to bank account. Okay, so as I mentioned, you don't need to do a separate withdrawal from Smart Park back to your points account or so, and then you submit another withdrawal from points account back to bank. Don't need. Whenever you want to withdraw funds, just submit a normal withdrawal request from your points account. Funds will automatically be withdrawn out from your MMF and be given to your withdrawal request. So how long it takes depends on what method you use. So if you withdraw back to your linked EPS bank account, usually within the same day or latest the next day, the funds should be back in your bank account. If funds added in tranches between now till 10K and bank can start withdrawing without losing on the without losing out on the 5.8% per annum interest for these funds. Wait, let me see. Added interest between now. Okay, so your day one, right, will start when your first funding in when you do your first fund in within this promotion period. Yeah. YS Chow. So for example, you in your example you mentioned 10K on 5th August, which is the first funding in during this promotion period. Then your day one will start on 5th of August. And then your guaranteed 5.8% guaranteed returns will end on 5th September. Yes. Okay. 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 Any more questions for this promotion? So better not to break into tranches. Yes, correct. You are right. So if you already have, let's say, the max amount, let's say 50,000 inside a bank account, not doing anything, idling, I think best not to bring the tranches so that you can enjoy the max returns for this period. Yeah. Okay. So now it's close to 8:40 already. We already kind of exceeded our time. Okay, give me a second. Okay, next. So before I end off, just want to share this Telegram channel that me and a few of my colleagues we are managing. It is the stocks trading and analysis Telegram channel. So main objective of this channel is educational post. And every Friday we also do a Telegram live. And we have been doing this Telegram live for Telegram live for the past 1 to 2 years. So if you're interested and if you want to learn more on investments or investing, you can join our channel, scan the QR code and join our channel. Happy to welcome you. Okay, and after this webinar, I'll also put up a post inside this Telegram channel. So in case you have any questions that I did not manage to answer during this webinar, please comment under the post later and I will reply your questions. Okay, do not worry, because due to time constraint, I need to end the webinar soon already. I already exceeded by 10 minutes. So yeah, guys, so thanks for joining me on this weekday evening. Appreciate it, and thanks for staying throughout. Okay, and please go and enjoy your rest of the evening. Okay, and if you can, do join my Telegram channel, and I'll see you there. We can discuss further. Okay, yeah. So Vanessa, I've already posted the links. If you missed any of the links early on, please refer to that message. Okay, thank you, Zenda. Thank you, William. Thank you, Buddy. Thank you, Dave Chi. Okay, one more question. When sell the smart park, is there a potential loss based on bid and sell price? You can refer to the you can refer to the MMF performance on our OEM Smart Park product page. It shows you the past performance for MMF. Because I cannot guarantee the performance for the future. So perhaps you could take a look at the past performance to give yourself a rough idea. Okay, thank you, Bunchu. Thank you, James Day. Thank you, Godfrey.